What's up, everybody? My name is Joe Brown, and this is Heresy Financial. Today, we are going to go over every single detail you were wondering, every question you had about the coming stimulus checks that are starting next month in July. In case you didn't know, the child tax credit was changed for 2021. The amount was updated. And not only was the amount updated for 2021, but starting in July, it will be sent out in the form of checks, as opposed to what was usually done is that, like, for normal tax credits, it's just applied to your taxes when you do your filing. So we're going to go over all the details so that you know whether you are going to qualify for this or whether you're going to qualify for a different amount, depending on all of the variables, because it gets complicated this year. Ready? Let's dive in. All right, so in a nutshell, before we dive into all of the nitty gritty, basically, you are going to start getting monthly checks from the federal government if you have kids. Now, the amount that you get is going to depend on two things. Number one, it's going to depend on your income. And number two, it's going to depend on how old your kid is. All right, so let's break it down. Let's first look at anybody who has the lower limit of income, which would be $75,000 for individuals, $150,000 for married filing jointly. The new child tax credit amount is $3,600 for kids ages 0 through 5, and it is $3,000 for children ages 6 through 17. So the way this was traditionally done, all the amounts were the same, and you didn't get anything for 17. It stopped before that. But the child tax credit amount was $2,000, not $36,000 or $3,000. It was $2,000. And basically what that means is that it just applied to your taxes at the end of the year. Now, if you're not aware, a tax credit is different than a tax deduction. Tax credits are way better than deductions. A deduction simply lowers the amount of your taxable income. So let's say you make $100,000 this year and you're going to owe 20% in taxes. Well, that would be $20,000, right? But if you have a $10,000 tax deduction, instead of being taxed on the full $100,000, you get taxed on only $90,000. Well, your same 20% rate means now you owe $18,000 because that's 20% of $90,000 instead of the full $20,000 which you owed before the deduction. So it lowered what you owed in taxes by $2,000. So in the case of a $100,000 income with a 20% tax rate, a $10,000 deduction lowered the actual amount you owed by $2,000. So that's deductions. They just lower your total taxable income. A tax credit, on the other hand, is much better. If you were to owe $20,000 on that same $100,000 for a 20% tax rate, a $10,000 tax credit instead of tax deduction goes directly against whatever you owe. So instead of owing $20,000, a $10,000 tax credit goes directly against that to lower your total taxable amount to only $10,000. So tax credits decrease the actual dollars of taxes that you owe dollar for dollar versus a tax deduction only lowers your taxable income. So prior to this year, if you had kids, in general, you got $2,000 of a tax credit per kid. So if you wind up at the end of the year and your total tax liability for the year is $4,000 and you have 2 kids, you owe nothing in taxes. Now, I want to clarify here that this has nothing to do with withholding. Withholding is simply prepaying your taxes. So this has absolutely nothing to do with, at the end of the year, whether you owe extra or get a refund, because that simply has to do with how much you've prepaid throughout the year. Your actual taxes that are owed, the actual amount you owe to the federal government or don't owe, is on net the same. Withholding, refunds, that's just whether you've prepaid or not. So this year, assuming nothing changed, instead of having $4,000 worth of tax credits because you had 2 kids, which were worth $2,000 before, this year, you have to look at their age to determine how much of a tax credit you're going to get for each. Let's say you've got a 7-year-old and a 9-year-old. That means you're going to get $6,000 worth of tax credits. But that's more than you owe, right? Because nothing changed from last year. Last year, you owed $4,000. You got the $4,000 worth of credits, so you owed 0. This year, you got $6,000 worth of credits, but you only owed $4,000. So what happens to that extra $2,000? Well, this is another change that happened this year for this child tax credit, that it is fully refunded non-refundable. And that means that even if you end up not owing any taxes, you can get the entire amount of the tax credit as a check. This is different than other tax credits that are called non-refundable tax credits that will only go against any taxes owed. So if this was a non-refundable tax credit, you have $6,000 worth of child tax credits and you owe $4,000 worth of taxes, it decreases your taxes owed to zero, but it's not like you get anything in return for that. That's not the case for this new child tax credit. The entire thing is entirely refundable, meaning that even if you owe zero in taxes because your income is so low, you still get to keep the entire child tax credit. On top of that, they removed the minimum earned income in order to qualify for the child tax credit this year. Whereas before you had to at least have $2,500 worth of earned income in the year to be able to qualify for this. Now they've completely removed that. So if you earn $0 and you have kids, you can still qualify for getting the child tax credit, even though you didn't pay any taxes because you didn't even have any income. You're still getting a tax credit. It's just a check at that point. Now, as a side note, this is structured as a tax credit, which means it's not taxable income. This is different than the stimulus checks that have come out so far that actually count as extra income for you that you're going to have to owe taxes on. It increases your total taxable income. This is a tax credit, so it's not taxable income. Okay, so we know the total amounts. For the younger kids, 0 through 5, you're going to get $3,600 per kid, and then 6 through 17, you're going to get $3,000 per kid. But unlike prior tax credits, and unlike in prior years, these tax credits are actually being sent out. They're divided up and sent out as checks every single month. So how much are you going to get per month? For the kids 0 through 5, you're going to be getting $300 per kid because it's $3,600 total. They're dividing that up by month. So there's 12 months in the year. Divide $3,600 by 12, you're getting it $300, but the payments don't start until July. It's not like you got them all year, so you're basically going to end up getting half of your tax credit in the form of monthly checks. And for the kids ages 6 through 17, all you have to do is take $3,000, divide it by 12, you're going to get $250 per kid. So for a hypothetical family, married filing jointly, making $120,000 a year, you're going to qualify for it. You have one kid, let's say 4 years old, so you've got one kid in the 0 through 5 bracket, and then two kids in the 6 through 17 bracket. This family will be getting $800 checks from the federal government from July through the end of the year. The total amount that this family will qualify for in terms of the total tax credit just from children would be $9,600 for 2021, and half of that will have been sent to them as checks. Now, who is going to actually qualify for this? We already know that anybody who makes $0 all the way up to $75,000 individual, $150,000 married filing jointly will qualify for the whole thing. So what happens after that? Well, this is where things get just a little bit more complicated. The total child tax credit will phase out by $50 for every additional $1,000 in income. But it's not even as simple as that because there's actually two different phase out schedules. Because as I mentioned before, the prior child tax credit was $2,000 per kid, whereas now it's $3,000 or $3,600 depending on the age of the child. But the way that they structured this is that extra $1,000 or $1,600 is on top of just the original $2,000. That original $2,000 is still in place as part of the phase out schedule. So here's what I mean by that. You're getting $3,600 for a kid 0 through 5. You make $150, you get the whole thing if you're married filing jointly. You make $151, you knock $50 off the amount. You make $152,000, you knock another $50 off the amount. You continue to do that as your income grows. You continue to knock off $50 at a time until you get back down to the original $2,000 amount. That means that for a kid who is 6 through 17, you're completely phased out of just the extra amount. You get back down to the original $2,000 by the time you earn $95,000 as an individual or $170,000 as married filing jointly. But you still have some room to go for the younger kids because there's a larger amount. There's $1,600 instead of $1,000. So if you've got a younger kid 0 through 5, that extra amount would be fully phased out by the time you're making $107,000 as an individual or $182,000 married filing jointly. At that point, you're still qualifying for the original $2,000 child tax credit per kid. regardless of the age. And your income has to jump quite a bit before that $2,000 starts to phase out. So for an individual making $200,000 or for married filing jointly making $400,000, you get the entire $2,000 per kid up to that point. Once you start making over $200,000 individual or over $400,000 married filing jointly, the same phase out schedule starts on that last $2,000 per kid. For every extra $1,000 in income, you lose $50 from that child tax credit, which means that by the time an individual makes $240,000 per year or married filing jointly makes $440,000 per year, they lost the entire child tax credit. Now you might be looking at this and thinking, hey, well, this is great if it goes off the year 2020 because of job loss or temporary unemployment or whatever the situation was, maybe you are going to qualify for the entire amount as long as they base it off of the 2020 income, but you're thinking, hey, during 2021, I'm actually going to make more than that, and I might not qualify for the whole thing. And that's entirely possible because this is a 2021 rule. They're just giving you advanced payments on those child tax credits. And so if that's you and you think you might not qualify for the whole thing, or you think that just the checks alone will be more than you'll actually qualify for and you might have to return some of it, it might be prudent of you to go to the IRS's website and unenroll. And this is possible with the new tool that they just rolled out on their website. You can go in there and unenroll from advanced payments. That way you don't have to worry about getting income that you're just going to have to give right back at tax time. Now, the other tool that the IRS rolled out on their website is a portal for non-filers to be able to input their information so they can get these checks. Because like I said earlier in the video, this is the first time the child tax credit is available for somebody who earns $0. Previously, you would have had to have at least $2,500 in taxable income. And even if you have, let's say, $50,000 in income, but you withhold a lot more than you're ever going to owe, and because of that, since you've basically overpaid your taxes, you're actually not required to file a tax return. You've paid your taxable liability, so the government doesn't care if you file to get your return. You've overpaid. Now, if the opposite is true, and you end up owing the federal government money, and you don't file, then you're probably in for some harsh penalties and interest owed on what you owe them. But there are plenty of people, due to either too low of income or because they just withhold way too much, they just don't file tax returns. If that's the case, you can use this portal to input your information so that the government can start sending you checks if you're a non-filer and you'll qualify for these child tax payments. And the third thing the IRS's website is going to roll out later, it's not available yet. As far as the point at which I'm recording this video, it's not available. It should be up soon, but it's going to be a tool for you to input updated dependents, because again, this is a 2021 tax rule, which means that it applies for your 2021 taxes, which means that if you have a new kid starting in 2021, that's not going to show up on your 2020 taxes. And they're just going off of the 2020 information. So if you have a kid in 2021, this new tool will allow you to go onto their website and basically input the information that you update the number of dependents, and then they can update the amount that they're sending you for those advanced monthly checks. So in summary, the majority of Americans are going to start getting monthly checks starting July 15th. The way the amounts are calculated is that it's going to be $300 per month for every kid ages 0 through 5 and $250 per month for every kid ages 6 through 17. These are advanced payments on child tax credits, which will total $3,600 for the younger kids, $3,000 for the older kids. These are fully refundable tax credits, which means that even if you make so little money that you end up not owing any taxes or less taxes than the credits, you'll still get the full credit. After it offsets any taxes owed, you'll get the rest of it as a check. In order to qualify for the whole amount, an individual will have to make less than $75,000 and a married filing jointly will have to make less than $150,000. The amount of the child tax credit will phase out, dropping by $50 for every additional $1,000 in income, fully phasing out by the time an individual makes $107,000, married filing jointly makes $182,000 for the younger kids. And then for the older kids, it's fully phased out by the time the individual makes $95,000, married filing jointly makes $170,000. At that point, you're still getting the original $2,000 child tax credit, all the way up to an income of $200,000 for an individual and $400,000 for a married filing jointly household. Once you hit that income limit, the rest of that $2,000 starts to phase out in the exact same schedule, $50 for every additional $100,000 in income, which means that you'd be fully phased out of the entire child tax credit by the time an individual is making $240,000 per year, and a married filing jointly household would be making $440,000 per year. If you'd like to unenroll, or if you'd like to update your dependents, or if you've never filed and you want to make sure you're getting the checks, go onto the IRS's website and they have portal tools for all of these things. I really hope that clarifies things, and honestly, for the majority of Americans, they're not going to have to do anything. The vast majority of Americans are just going to start getting checks, and as long as there were no drastic income changes from 2020 to 2021 for the majority of American households, they're not going to have any major surprises come tax time. In the description below, I've put the link for the IRS's webpage that has the frequently asked questions and all of the information about this new child tax credit, because like I said, it's complicated and you still might not be clear on some of the details, especially if your income falls in between some of those phase out ranges, or if you have some other complicated tax situations. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.